You book a flight, you pay, the airline makes money, the government takes its cut, and you get a seat. A billionaire buys the entire plane. You'd think they pay more. They don't. They often pay nothing. Sometimes they get millions back. Not from the airline, from you, through the tax code. A private jet, something you'll never own, becomes a tax refund you help pay for. Not through fraud. Through a perfectly legal mechanism that treats a $50 million toy like a wrench. The tax code calls a private jet not a luxury. Not a toy, a business asset. That matters. When you buy a car for personal use, you pay sales tax and that's it. No deductions, no write-offs. It's your money, your choice, your problem. When a billionaire buys a jet, their accountant files it under business property. The tax code has a rule for business property. It wears out, so you deduct it. A printing press, sure. A jet? That's where it gets creative. The logic makes sense on paper. A business buys equipment, say a printing press or a delivery truck, and that equipment wears out. The tax code lets you deduct a portion of that cost each year to reflect the declining value. Fair enough. Except Congress added a turbocharger, bonus depreciation. Instead of spreading the deduction over years, you can claim a massive chunk immediately, sometimes all of it. In the first year, buy a $50 million jet, claim tens of millions in deductions in year one, and watch your tax bill evaporate. They call it bonus depreciation. Bonus for whom exactly? If the deduction is large enough and your accountant is good enough, you don't just pay zero. You create a loss on paper that generates a refund. The jet still flies, you still use it, but according to the tax code, you just lost money. Here's where it gets slippery. To qualify, the jet has to be for business use. Patrick Gallagher, president of NetJets, the fractional ownership company Warren Buffett bought in 1998, said it plainly. For most people who own their own airplane, it really doesn't make financial sense. He's talking about operating costs: fuel, crew, maintenance, insurance, hangar rent. A private jet is ruinously expensive to run. But Gallagher's missing the other half of the equation. It doesn't make financial sense as transportation. It makes perfect sense as a tax shelter. The IRS knows this. They've issued warnings about personal use masquerading as business use. The rule is simple. If you're flying to a vacation home, that's personal. If you're flying to a board meeting, that's business. Guess what billionaires have? Board meetings. Everywhere. Conveniently located near vacation homes. The line between business and personal use is drawn in pencil. And billionaires have excellent erasers. Those erasers cost $800 an hour. Tax deductible, naturally. Even better, if you charter your jet out when you're not using it, now it's an income-producing asset. That makes the tax treatment even more favorable. You might fly it 10 times a year for personal trips, rent it out twice, and the entire aircraft qualifies as business property. Say a billionaire's company, because it's almost always structured through a company, buys a $40 million jet. They claim bonus depreciation in year one. That depreciation is a loss, a big one. Watch what happens next. It flows through to the owner's personal tax return if it's structured right. That loss offsets income from other sources. Salary, investments, capital gains. If the loss is large enough, it wipes out the tax bill entirely. And if you already paid estimated taxes earlier in the year, the IRS sends you a check for the difference. You just got a refund for buying a jet. Meanwhile, you buy a car, let's say a nice one, $50,000. You pay sales tax, call it $4,000. You drive it for work every day. Commute, client meetings, errands. Can you deduct it? No. The IRS considers commuting personal use. Even if you use the car exclusively for work purposes, the standard deduction barely makes a dent. You're certainly not getting a refund. Two vehicles, wildly different tax outcomes. The difference isn't the vehicle, it's who gets to file the paperwork. And here's where it gets expensive, for you. Before you assume this is just corruption, let's be honest about intent. Bonus depreciation wasn't designed for private jets. It was designed to stimulate business investment. The theory: if you let businesses write off equipment costs immediately, they'll buy more equipment. More equipment means more manufacturing, more jobs, more economic activity. It's a stimulus tool, and it works for actual productive assets. A factory buys new machinery, deducts the cost, reinvests the savings into hiring or expansion. The economy moves. But the law doesn't distinguish between a lathe and a Learjet. Both are business property. Both qualify. The tax code doesn't ask whether the asset is productive or decorative. It just asks whether it's used in business. Congress could fix this. They could cap depreciation on aircraft. They could require detailed personal use logs with penalties for abuse. They could exclude luxury assets entirely. They don't. And honestly, this part bothers me more than the jet itself. And the reason is simpler than you'd like. The people who benefit from this loophole are the same people who fund campaigns and hire lobbyists. According to industry data, ultra-high net worth individuals, people with at least $30 million in investable assets, make up the core private jet market. In 2023, private jet owners collectively claimed over $8 billion in bonus depreciation, more than double the IRS budget for auditing high-income taxpayers. These are people who don't just use the system. They have a hand in writing it. Here's the part that lands in your lap. Every deduction a billionaire claims is revenue the government doesn't collect. That revenue has to come from somewhere. It comes from you. Through higher rates on ordinary income. Through fewer public services. Through a tax code that squeezes wage earners while treating asset owners with kid gloves. We're not paying for the jet directly. We're paying because the billionaire isn't. The jet still costs tens of millions to buy and millions annually to operate. But the tax refund softens the blow. What looks like an extravagance to you is an accounting move to them. The IRS blesses it. Congress enables it, and the system calls it fair. NetJets offers fractional ownership precisely because even rich people balk at full ownership costs. You buy a share, split the expenses, avoid the hassle. It's more economical. But for billionaires at the top, full ownership isn't about economy. It's about control, privacy, and yes, tax strategy. The jet becomes a tool in a larger financial structure, one that's optimized not for transportation, but for minimizing tax. You'll never own a private jet. You'll never claim bonus depreciation on one. But you'll spend your entire working life funding a system that lets someone else do both. This isn't a glitch. It's not an accident. It's a feature of a tax code written with one set of rules for people who own assets and another for people who earn wages. The jet is just the most visible example. A $50 million reminder that the rules were written before you sat down to play. You're still booking that flight, still paying full price. But now you know who's flying for free, on your dime. That's money, actually.